Hello everyone and welcome back. In this video we will take a look at the Tesla stock and we will do some technical analysis, we will do some fundamental analysis, and we will take a look at what the analysts are saying. They have been pretty accurate in the history, so it's worth mentioning. From a technical standpoint, I think there is a resistance coming. I think it's in this range here from 290 to 312. And if we take a look at the volume in this range, we can see that there are huge amount of volume below 317, and after that there is not much volume relatively. So then the price tends to move a lot faster when there is smaller volumes. Next up, we will take a look at what the analysts are saying. If we look at the quarterly, we can see that they have been pretty accurate in the history. Um, for example, they have been wrong. Their surprise has been 5%, 5%, and 0.5%. And in the revenue, it's been 2%, 1%, 1%, etc. So they have been pretty accurate. So there is a reason to take a look at this, even though many doesn't like the analyst regarding Tesla, but it's worth at least looking at. So the EPS for the next 3 quarters will be 0.79 and 0.84 and 0.93, which is 4%, negative 20%, and negative 22%. This is not the best, but is still, in my opinion, it's still best in the industry. It's pretty rare to find companies making a lot of money in this environment. However, if we take a look at the revenue, percentage-wise, we can see the next 3 quarters, the analysts are saying it will grow for 43%, 18%, and 11%. So that's very good for such a huge company. I don't think you can find a lot of companies that is growing so rapidly. And here you can see the revenue growth. From the annual perspective, the analysts have been very accurate in the history, so it's worth taking a look at this. The revenue will not come too far away from these numbers, I believe. Next up is some fundamental analysis. The revenue growth we can see from the last 3 quarters has been 56%, 37%, and 24%, which is insanely good for such a huge company. The profit margins is at around 10 to 15% as a company as a whole. Then the cars is much higher than that, but as a company, it's between 10 and 15%, which is also insanely good if you take a look at the competitors. And I just want to mention from the cash flow statement, they are putting a lot of money into the investment. For example, in Q4 they had 6 billion USD coming into investing, and Q1 they had 2.5 billion USD. So they are making a lot of money into the investment, and still they are making a lot of money, and they have very good profit margins for being such a hardware company. They are selling cars. It's not easy to have high profit margins, but they have. Even though they put a lot of money into investment. Let's take a quick look at the competitors in the industry. For example, if we take a look at Toyota, they do not have good revenue growth. As you can see here, it's 9%, 10%, and negative 6%. So it's nothing good to say about that. They don't have good EBIT growth, and they don't have good profit margins. They have about 5 to 6% in the last 3 quarters. So that's not a competitors from these numbers. And if we look at Ford Motors, they have a decent revenue growth and it's climbing upwards. So that's something. But they have a declining EBIT growth and they do not have good profit margins. They are not making a lot of money. It's about 3% for the last 3 quarters, and they are relatively high valued compared to how they grow. They are not growing like Tesla do. And if we take a look at GM, they also have a declining revenue growth. That's very scary. I do not like that. And they have also low profit margins. And let's take a look at NIO, for example. As many of you probably already know, the last quarter, Q1 2023, they went negative 0.58% in their revenue growth. That is not something you want to see. And you can see it's a whole lot of red. They have their profit margins is on negative 45%, so they are losing tons of cash. Here we can see they lost 700 million USD. That's not something you want to see. That's not something I would put my money into. Let's take a look at Xpeng, a very small company, I think, pretty small company. They lost revenue, negative 50% for their last quarter, and the Q4 they went negative 45%. So their revenue is declining rapidly. They are also losing tons of cash. So This is a very hard industry. It's very hard to make money in the automotive industry. And as you probably already know, Tesla is not only making cars, they are on the forefront of AI for full self driving, and their battery expansion. They are building huge amount of batteries, and they do it very successfully. And their battery packages for homes and etc. So it's a very legit company, and I like it. I have some investment for the long term, but I also swing trade it. Yeah, so that's pretty much it for this video. I hope you enjoyed it, and see you in the next video. Bye.